Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on gold market. It's actually, there are a lot of things that we have to discuss right now. In video we will talk only on short-term time frames and daily and intraday, while on the longer-term charts, including monthly and weekly, if you read the analysis, you will see lots of patterns and a great harmony in the different extensions, targets. All of them are stand around important levels and long-term targets that we have. Just to remind you that our major target is 2865, which is all-time OP extension on the gold market. So, and everything is turning around it. On the weekly chart, on the monthly, and even on the daily, you can see this butterfly that we talked about, and its 127 extension stands precisely at 2858 level, which agrees perfectly with the patterns that we have on the higher time frames. But on the next week, we will be focused on a range between 27.7 and 28 previous top. So probably we could treat this level as a sale for coming week by the two reasons. First of all, this is some inner targets to the butterfly, which is the ABCD, and it agrees with the daily overbought level. And second, this is actually previous top, which slightly stands above the overbought. So most probable that this is an area, if even market will show some acceleration, will become the top of the coming week. So we treat it as a sale and potential sale. At the same time, maybe we will not see the reaching of this level because you can see in general upward direction is a bit slow. It's not really some explosive rally. It's really gradual and stable. But this is not the sign of the weakness here, because as I already talked about this in last week and 2 weeks ago, market shows the great resistance on external pressure. If you take a look at the performance on the dollar, performance of the 10-year on the general yields in the United States, you will see that it was really outstanding rally, and gold was rising together with them. It's actually happens very rare and in the periods of some extreme situations, rising of the risks, geopolitical tensions, and so on. So that's why the vision that this is really weak action is deceiving. It's in fact not weak, and if it would be weak, here's the pullbacks might be significantly lower, but market stands really stable here, showing just minor pullbacks. So returning back to the possible potential trading plan for the coming week, we should take into consideration two major things. So first is target that we already talked about, or let's call it not as quite a target, but at least the ultimate upside level that we could see. And the second, which is I think that even more important, is the 2660 lows. Why these levels I treat as a vital for a short-term bullish tendency with this upward action? Because these lows is actually the end of the reaction to the COP. Since we are standing with this ABC reaction, market was standing in an extension mode, then contraction, reaction on the COP is completed in the 2660. This, by the natural progress of the market and natural progress of the swings and structure of the swings, should be extension to the OP. On the way to the extension, we do not want to see any significant drops, and even more, we do not want to see the reversal swings and drop below the previous lows that has set the bottom of the previous retracement. If market will break it down, it means that not everything stands good with this bullish tendency, and more probable that this tendency will be over, as market could show the downside collapse and the fake failure of the upside breakout with this triangle. So currently for the gold market to remain bullish, it is vital to stand on the way up and do not show drop back below the trend line, do not return back in the triangle body, and do not drop below 2660. So that is what is really important. This is the second moment. Now if you take a look on the intraday steps, here are some details. On the 4-time frame chart, since we have estimated that 26 is our vital area, 2660 I mean, it means, well, really, it's a very handy conclusion to us because we narrow the amount of the levels that we have to control. So here is only 2 acceptable levels to us on the 4-time frame chart. This is 2682 FIB support and actually 2660 itself, which is actually confidence support on the 4-time frame chart. It agrees with the trend line, so we actually make it relatively strong level. That is only 2 levels that we will consider for a possible long entry. I mean, levels that not below this area. Here is actually, we have 2, but another one we have on hourly chart that I will show you a bit later. So on 4-hour frame chart, we also have the local XOP target, which is stand around 27.45, 47. It's XOP, but this is, as you understand, very close to the daily OP, it's around 27.70. So here's might be not very significant reaction, something of this kind of direction of the local XOP here. And here's, by the way, also XOP target if you calculate it from these A points, not from this one. If you will take the A point right here, you will see that market also stands now at XOP and shows reaction down from it. So here's also might be not really significant retracement. And that's the levels. Now, if you take a look even on lower time frames on the hourly chart, here you could see that our Friday trading plan works perfect. We said as will be retracement, probably at least to the 30%, because this is minimum target of the butterfly. Now it is done. This is also, you can see, agreement with this ABCD, minor ABCD OP level. What conclusions we could make on the hourly chart? First of all, it seems important the shape of the ABCD pattern. You could see that the CD leg relatively faster than the AB. This is the hint on a possible deeper retracement. Either market will try to complete the OP at least, or it even could go to the XOP that is perfectly agrees with the same 2682 that we have also on the 4-time frame chart, right? And you can see that here we have perfect confidence area. So here's the 30%, 2682, here's the 618, 2682. So this is confidence area and agreement with the XOP. This level is also possible to consider for taking the position. So in the current circumstances, I would say that the splitting of the position not as bad idea as it could be. Monday it will be the holiday, Martin Luther King Day, so inauguration. How market will open on Tuesday, difficult to say. That's why this level also might be considered for position taking and splitting in parts, taking some minor part in here. If market will drop right there, which we suggest it's not really small chances for that, based on all the things that we said, we will take the rest right there. I suggest that's more probable that the retracement will stop here. I would use this level as some kind of the indicator of the validity. It will be possible that if market will drop here to consider it also for position taking, but in the current circumstances and considering at what level we stand right here, this is just minor target, nothing important. Major retracement has happened, reaction on the COP. It's more logical to suggest reaction at the best to the 2682. That's why I would mostly focus on these two levels for position accumulating and use this one as some kind of the invalidation point and hiding the stops below it. So that in was what we have on the gold. Situation right now on the gold is very interesting. So if you take a look at the weekly report that we have prepared, you can find a lot of interesting stuff there. And it's really, situation might develop very fast in the nearest few months.